Hello guys, welcome to this Peep Show. We are Wednesday, the 1st of April 2020. Sylvain Loganadin with you today for a new Peep Show, for a new live. So the US market is opening in 23 minutes. We have less than half an hour to prepare for the US market opening. So basically this session will be very interesting because we have a technical, and I will say a bearish technical outlook on the US equity market. Why? Because if you look at the Dow Jones, we entered into a trading range, okay, where the highest price of the range is 22,600 points, and the lowest point of the range, the support level, basically is this level. So the level we are currently testing, so 21,000 points. Okay. So basically, in a range, it's pretty easy. Buy here, sell here. It all depends on what you're looking to do, and what is also your strategy. For now, I'll say that we have to wait for the US Open. I don't have any strategy right now. Actually, I do have a strategy, but I don't have any trade open now. Let me show you the strategy I'm looking to implement for today's trading session. So I will switch on Arya directly. So this is my Arya dashboard, and today I decided to have those parameters. So basically I'm on a market execution entry type. So this is my choice, but I will maybe switch to automatic. I have a risk on that trade of 1%. My consecutive loss and wins levels are set at 2, and I have a stop loss at 23,000 points. So I selected a stop loss type that is a price stop loss. I can also, for example, change it to a fixed stop loss price. Okay, to a fixed stop loss. If I select fixed stop loss, I can, for example, say I want a 500 points stop loss on that trade. I want a 2,000 points stop loss on that trade. I want a 30 points stop loss on that trade. I instead decided to select a price because I want a stop loss at 23,000. I have a take profit on the future trade. I'm looking to take at 18,500 points, and I also have what we call a trading mode, so a trading stop loss, and that mode is the break-even mode. So, and I set the activation take profit distance at 50%. So when I will enter a trade and we will be halfway through my take profit level, my initial stop loss will move at the break-even level to securize my trade. So this is the parameter I chose. So if you want to have, I will say, a more visual representation of the trade, I will have on that trade a stop loss level that will be here at 18,500 points. So this is the blue line here. So I will maybe put that chart into a 4-hour chart. It will be maybe easier for you to look at it. Okay, so my stop loss is here, and my take profit level is here. Okay, and I'm looking to sell, but the execution of my trade is for now a market execution type, because I'm willing to choose when I will enter, because I have the feeling that I can maybe wait for a rebound around here to sell, which will maximize my risk to reward ratio. If I short here, if I entered a selling trade here, a short position here, I will have a decent stop loss level regarding my take profit level. But if I have a rebound around here and I'm able to sell around here, my stop loss, I will say the distance between my entry point that will be here and my stop loss will be smaller, and also the distance between my entry level and my take profit level will be bigger. So a smaller stop loss distance with a bigger take profit distance is basically translated into a better risk to reward ratio. So that's why that's what I'm looking for, and that's what I'm willing to do on that trade. Okay, so that's one of the thing I'm on. for today. So I'm looking to enter a short position on the Dow Jones, and for that reason. So for which reason I'm willing to enter a short position on the Dow Jones? Let me use that whiteboard to show you why I'm willing to maybe enter into a short position on the Dow Jones. So first of all, we have, so I will put a first thing here. First of all, earnings season in, I'll put earnings, okay. Earnings seasons that will be published mid-April, okay. So mid-April we'll have the earnings season. So before the earnings seasons, nobody knows what will happen. So some traders are selling, some others are slightly buying. So we don't know. So this is for me a neutral factor, okay. Then second, let me dezoom a little bit, okay. So or even we'll do it here. Then the second factor why I will try a short position maybe today. I'm not sure I will take it. It will all depend on the price action. But one of the other factors is the oil market. So basically the energy market. So oil. As I told you, if we don't have any agreement on the production cut between Saudi Arabia, okay, Saudi Arabia, Russia, and the US, if we don't have any agreement here, the demand will be either the same this year or decrease, okay? Why? Because of the coronavirus, okay? Coronavirus means less business, less transportation, less demand for oil, less production, less overall productivity in the world, so less demand. And what is Saudi Arabia and all the other OPEC countries willing to do starting from today? So starting from the 1st of April, they are willing to raise the production of oil. Okay, their production of oil, they want to raise it at the highest level they ever produced in their entire history. Okay, Saudi Arabia, UAE, Kuwait also. So a lot of countries are willing to really produce a lot because they feel that this is the right move to do for now. But the United States are not making money, and it is very dangerous for the United States to have an oil at $20 per barrel. Okay, $20 per barrel is very dangerous because the United States actually make money. So they actually make money around $50 per barrel. So this is also their profitability level. So $50 per barrel is the price they are looking for. But now, what will happen and what can happen between those two countries? Oh, weird! I cannot do it. So let me erase this. What did happen on Monday that can change the whole game, and also that can maybe change what is going on? So basically, Russia plus the United States called each other. So Vladimir Putin and Donald Trump called each other, and they agreed on one official from Russia plus one official from the United States to meet. Okay, so official energy people to meet and to find some agreement. I will say some agreement. Okay, on the oil production matter. Okay, they need to find a solution to make those oil prices go higher. Else, the United States will lose a lot of money because they have a lot of oil projects that are being financed by banks, and with an oil at $20 per barrel, they're not making money. Those projects will fail and will also, I would say, put the financial and the US financial institutions into deep danger. So they need an oil market that is going again higher. So if you look at the prices of oil right now, this is something that is definitely dangerous. If you look at the daily chart, look at what is going on here. Okay, we have a total, I'll say, a total lack of volatility right now on the oil market. It's not a total lack of volatility. Obviously, this market is one of the most volatile during those days, and also this year, because we lost 70% of the value of the oil this year. But what I'm saying is that the market is basically moving sideways since 1 to 3 days. You also have Algeria, who called the OPEC plus countries to meet this month in April to find a solution, but all the major countries, Kuwait, Saudi Arabia, etc., declined the invitation, saying that they don't need to meet this month, and they don't see any reason to meet in this month to reduce the production, as they are fine with the current oil level. So, as you can see, some countries in the OPEC alliance are strongly suffering from those low prices, and some other countries are fine because they make money, and that's okay for them. So this is one of the reason the market can definitely go lower during this week and maybe next week. The oil matter is basically one of the factors that is the most dangerous for the financial market and for the S&P 500 as a whole. Okay, if you look at the S&P 500, we are definitely here testing the support level of that range, and it's maybe now or never. If we have a rebound, if we do have a rebound, it's now or never. If it's not now, we can definitely see the latest lowest level, and then who knows what will happen. Okay, so we just have to be prepared either way. 12 minutes. All right, guys, it's time for me to end this session. Before I end this session, I would like you to join the We Love Arya Facebook group, the We Love Arya World Facebook group, which is basically the group where we have all our international traders. So you can see also the schedule of our meetings. You can also find the replays of the master classes that we host, also the replays of the technical live that we are doing every day here. Okay, so you will find everything here. So you type We Love Arya World on your YouTube, on your Facebook research tab, and also if you want to discover algorithmic trading, also have free education, discover the Arya ecosystem, and also be part of our community. I invite you to join the Arya starter pack. This starter pack is basically available on the comment section. So if you go on YouTube, if you look at the first comment, you will find the link. You will also find the link to join the Arya starter pack for free on the description of our YouTube videos. You just have to give your name and also your email. You click on start your free trial and you will receive everything. So here you can also have access to our online conference about automatic trading and how to automate your trading and take it to the next level. You have also our appearance in the press. So you can see here Guillaume, who is the founder of Arya, who went on TV. So BFM Business is the equivalent of CNN, and talking about how automated trading is changing the way retail traders are trading. So this is something that we've done. We've been featured also on Le Figaro, Forbes, etc. So just look at it. Also, you have the testimonials of our clients. Look at it, test it, and we see each other tomorrow for a new Peep Show, guys. See you.